morning. It is Wednesday, March 12th, 2025, almost 10 a.m. Eastern Time. As always, we remember that if we trust your edge and your method, and if you trade only the setups it gives you, and if you follow the rules, if you are patient, and if you think in terms of weeks, months, never today or even tomorrow, then you will make a lot of money and live a life very few can afford. And just to unpack this just a little bit, think in terms of weeks, months, never today. So whatever happens today, we're just going to take our MeBob setups. If our MeBob setups yield a profit, great. If they yield a loss, great. Doesn't matter. It's all about maintaining an even keel. We're in this for the long haul. We're not trying to make our rent money today. We're not trying to pay our mortgage today. Our refrigerator and cupboard isn't bare. There's food. What we are doing is trading with an edge, and that edge is such that so long as we take all the trades day after day, week after week, month after month, we are going to make a lot of money. We are not trying to make a lot of money today or tomorrow or even this week or next month. What we're trying to do is stick to our trading process. So long as we stick to the process, the money will take care of itself. So let's take a look at what the ES has been doing. Okay, we had a gap open higher, little 2B top up here, yesterday's high. 2B, they took the little stop run, price closed below. Sell short at the close if you're a price action trader, stop above the high. Looking for if you're a swing trader, you're looking for a fill of the gap. You can see here on the third bar of the day, price did start making that attempt to fill the gap. When you see the market gap and then make an attempt to fill it during that first 15 minutes, typically indicates we have greater odds of filling it that day. Let me go to, this is my end of the day review chart. That's why I have all these extra squigglies on it. That's the current open, current low. I'd rather have a cleaner chart while I'm trading. Because visually, I know that this is the current high. I know that this is the current RTH low. Those lines are helpful when I'm doing the review at the end of the day, but they're more of a hindrance when I'm actually trading. So gap up, 2B top, sell the close. If you're a price action trader, this is not MeBob, but this is going to be incorporated into the MeBob trading plan going forward. The timing of that is not determined at this point for at least the remainder of this week. The focus is strict trading of the MeBob rules, and this weekend I'll make a decision as to whether that will continue or if we're ready to add some price action components to our trading plan. So we have this bar, when this bar closes, now this year, this would be a sell. So if you recall from the videos yesterday and several days, when you see the ES form, so with a doji like this, with a small body in the upper third, with a long tail, you want to get, I don't mean you, I mean me. I would want to be short, put a stop a tick or two above the high, profit target 10 points or the low of this bar. I would say whichever's closer. So if I had sold the close and got filled at say 825, the low is 97, so 820, I'd be looking at 98.25. So for example, if I were short, I'd be looking for, let me get the snap off here. this line would be my profit target on the short here. And again, anything can happen. Yesterday, this resulted in at least 2 profitable trades, and I believe it was one that would have resulted in a losing trade. Again, this will become one of our price action setups. It's not there yet. And I'll define these better once we get to it. As I explained yesterday, this one here, we're looking at, this is more of a buy setup, breakout, inside bar, almost like they're getting ready to shoot the cannon higher, as opposed to something like this, which is outside of the previous bar's range to at least some extent. This one here, this was a buy. This one here was a buy. So anyway, this bar is going to close in a couple of minutes, and when it does, the MeBob will open, and then the MeBob will close, and then we need to wait for the subsequent bar to close. That would be the earliest point at which we get any kind of signal to take a trade in any direction. So we're just going to have to wait. I'm going to pause the video right now, get another cup of coffee, and also going to see if I can find some low music that I can play in the background so I don't have to feel compelled to speak constantly. Here we go. That would have been a profitable trade. Hit the profit target and then some. And then one thing I'd like to say here in the video, if you are participating at the Forex Factory thread, and I certainly encourage everyone to do so, there's a lot of good stuff going on there. And this is really a much larger project than simply the MeBob rules or simply the trading plan that will ultimately be composed of MeBob plus price action rules. This is really about fixing trader errors and error-proofing your trading as much as possible. I believe that each and every one of us has it within ourselves to become a consistently profitable trader, to abide by the Gonzalo affirmation and make a lot of money trading and live a life because of it that very few can afford. What prevents us from doing so is a whole bunch of natural human psychological and mental emotional characteristics that lead us to reckless trading behavior, FOMO, anticipating setups before they actually trigger, over trading, over leveraging, trying to get a loss all back at once, all of those things. So there's our MeBob bar open. So these are all things that we're trying to work on, and the foundation of fixing those and moving forward is sticking to learning, trading, and sticking to these MeBob rules in a disciplined manner. So again, this bar is MeBob. Once this bar closes, that will establish the MeBob range for the day. Then we need to wait for the next bar to trade. So we're still at least 9 minutes away from our first trade signal. So again, I'm going to go ahead and pause, get that cup of coffee, see if I can't find some cheesy music to play in the background at a low volume level so you'll still be able to hear me. And that way the video maybe would be a little bit more comfortable to listen to and also for me to record. So this here I typically wouldn't do, this looks like the same setup as here. I wouldn't take the second one. Now you have two big buying tails. I would be doing two things, price action wise. You could put a buy stop here and be long. Again, I'm looking for 10 points given the current volatility. This could also be the low of the day. A swing trader would be looking for maybe a profit up here at a retest of the high, maybe hold for the whole day if there's a breakout. Again, that's not me. I'm not a very good swing trader. I'm much better at taking two or three, little paychecks out of the market rather than one or two big ones each day. So I'm going to pause. I'll be back, and we'll see what MeBob does for us. Okay, I'm back. We have MeBob, and just about a minute remaining in the first bar post MeBob. Failed breakout above the high of MeBob. Failed breakout below the low. This has sort of been the characteristic theme of the week, I believe. But we wait. And again, if this bar closes inside of this MeBob range, we will then wait for the next bar to form. If it manages to close below, we will go short at the market. If it somehow reverses and closes above the high, we will go long at the market. Right now, I have my mouse clicker on the sell market button, and nope, no signal. So now we wait. Now we wait. In MeBob, we trust. We trust our method. We follow the rules. We take only the setups that it directs us to take. We think in terms of weeks, months, never today, nor even tomorrow. So long as we do that, we'll make a lot of money. And we'll live a life very few can afford. So, not going to be much to say during the course of this bar. Anything can happen. If it closes down here, it'll be a short at the market. I guess one thing to talk about is, so currently we're using the opposite extreme of the MeBob range to place our stop loss. So wherever we get short, if this bar closes down here and we go short at the market down here, MeBob rules dictate that our stop loss is one tick above this high, 1775. That'll be a fairly significant risk. So I would probably make my first change to MeBob this weekend. And this is why I'm not sure we're going to add price action quite yet. I'm going to use this week to do the MeBob rules according to the original. Next week, my inclination is to add a price action stop. So, for example, in this case, if we sell short at the market because this bar closes below the low of the MeBob range, we'd want to have a stop loss, maybe at somewhere between 1 and 4 ticks above this high, probably a tick above the high of this bar. Because if you're trading price action, you have this gap up, so there's an invisible swing here. You got two leg pullback, and you now have a high, and so far a higher low. So we could get a MeBob signal, and this could race up here, big green bar, stop us out. And if we were trading price action alone, our stop, if we sold this close, went short at the market when this one closes, our stop loss would be the high of this bar, not the high of the MeBob bar. But again, I'm not guessing what's going to happen. I'm not predicting. But I think that would be the best way to introduce the first price action element to the trading plan. And that would be to adopt a more price action based risk management. And then there's a concept Al Brooks speaks of. He calls it always in. If there was a trader who had to always be in the market, where would that first long or short occur? Where would the reversals occur? And I'm thinking that maybe when we're ready to introduce some more price action elements, that a week of always in trading for the morning session might be the best way to introduce those. Well, this is not to indicate or imply that that would be the complete and final version of our trading plan. Only I'm just thinking of ways to introduce price action elements to those who, there we go. Short, see, that would be where a price action trader would be getting long here. But we're doing MeBob. So let me put my stop loss up here, and let's see what MeBob does. So 1775 should be our stop loss. Okay, nothing to do but wait. Market will decide. It's not up to us. It's not up to MeBob. It's up to the market. We can only trust our edge and our method and trade the setups it gives us. We're following our rules, and now we just need to be patient. So there's price action stops. Another one that I will often use. I use this on the my NQ trades. Is let's see. I would look for the 50% retracement. So it says 10.88. So this is a short trade. I'm rounding it up. So it's 56.11. And then I would put a stop at I would have gotten stopped out there, 11.25. Well, we got our MeBob profit on that one. So now we wait to see if we get another MeBob set up. What I'm going to do is I'm going to go ahead and pause the recording. I'll be watching as best I can. I do have some work I need to get done for the good old day job, and I'm going to be working on that. I will be watching this, and if it looks like we're going to get a potential for another MeBob trade, I will start recording again. Okay, so we sold short at the close of this bar, profit target here, closed below, but this is not an additional entry, in my opinion. And this bar is also not an additional entry to go short. If this bar had closed inside, and then this bar, if this bar were to close below, that would be a second short signal. But as I understand MeBob, so go here to the and when you look at the original MeBob rules, it's difficult to see whether or not Robert Falk, the creator of the method, if he even allows for, like if he accounts for additional MeBob setups. I mean, in this case, selling would have been the right thing to do in terms of making a profitable trade. Once we do add some price action, I would have been inclined to put a sell stop below the low at an inside bar following a breakout, and this is an IOI pattern. This bar's range is inside of this one. This bar's range is outside of both the previous bar's range and the subsequent bar's range. If you're a student of Al Brooks, this is a setup. It's called an IOI, inside, outside, inside. It's a breakout setup. It's a defined setup. Buy stop above the high, sell stop below the low. But we're not there yet. Strictly speaking, I would paste these MeBob rules. Look at them here. I don't know if you can read them. I can make them a little bigger, maybe without disrupting the chart too much. Let's see, what if I increase this to 25? Oh, that's big. So the original rules really only account for that initial close outside. I made an assumption that a price breaks out, closes, you take a trade, win or lose. If price were to retrace, close above, that would be another one, and that's how we've been trading it, and that's how we're going to continue trading it. Now, if anyone posts to the thread that they sold here, I think that's fine. Just by myself, my inclination is we need to get a close back in, or preferably a deeper retrace, and we've had that a few days, right? Price closes in, trades through, doesn't have to break the high and fail, but it's done that. So to me, this was a sell I would take under normal circumstances. Again, I'm committed to the MeBob for this week, but a sell stop would have been filled at 97, and profit target would have been filled at 87. We've now filled the gap. This is the previous day's settlement. I mentioned back here, once if price makes the attempt during the first 15 minutes of trade to make its way back toward previous day's settlement after a gap, the odds increase tremendously that gap is going to fill. If instead price traded away from the previous day's settlement in the direction of the gap, so the gap direction is up, if price during the first 15 minutes had trended up, the odds of this gap filling today would have been very low. I didn't make that up. There's a book. It's by Victor Sperendeo, and he talks about gaps. His data goes back to the 1980s, but it seems to still hold today. If price gaps up and starts trending toward the previous day's settlement during that first 15 minutes, odds of the gap fill increase. Price gaps up, continues trading up and away from the previous day's settlement, the likelihood that the gap will fill on that day decreases. So again, I think if anyone took this as a MeBob short, that would be fine. It was a green bar, so first trade was a short, profit was filled, market attempted to reverse up into the MeBob region, closed back below it. I think going forward, I would take this trade on a MeBob basis. Now that I think about it, I think that would be smart. I think that's how I'm going to do it going forward. So when I do the MeBob review tonight, I'll review what I just said. I think this should be a MeBob trade because it's essentially a failed reversal. Trend in the market is down. Profitable short. Bulls tried to reverse it. At one point, it got back up into the MeBob region, closed green but below. Sell at the close would have been appropriate in this case, I do believe. One thing I will say is MeBob is a very relaxing way to trade. The reason it's relaxing is there's no decisions to be made. The only time I think I felt any tension at all this week was yesterday. You recall. So this was our MeBob region yesterday. Let me put this one back. So here's our MeBob bar yesterday. So this bar closed inside, and again, I was prepared to sell short anywhere here, but once this bar broke down here and closed here, it was to me no longer a MeBob short. We did discuss this in the thread yesterday. Machine learning made he argued that yes, this was a setup, and if you didn't take it because of intuition or experience, so be it. So I think that's smart. I'm going to call this a setup. If you had sold the close, you would have been in compliance with the MeBob trading rules. If you didn't, I think you're still in compliance. Let's see. Then over here, I did feel a little bit of tension, only because I wasn't really sure what to do. I would have, and this is where even experienced traders, right? I felt this needed to close inside. Market doesn't care what I feel. MeBob doesn't care what I feel. Robert Falk would be telling me to, this isn't about your feelings, good bad. This is about the rules. Gonzalo Garcia Pelayo would say the same thing. So going forward, I'm going to consider this a short. Price moving right along. And then once you get bars like this, once you get this close, again, if this weren't a MeBob focused week, I would be short right now. I would have sold at the market right here. Strong bear bar, strong bear bar. We're going to get at least another leg sideways to down, and probabilities are increasing that we're going to probably test this day's low and possibly yesterday's low. So Tuesday's low was 55.7150. Yesterday's low is all the way down here. But I'm going to go ahead and wrap things up for this video today. I'll be back after the close this evening with a MeBob review, where we'll review the trade I did take, the trade I didn't take but in the future will, and of course any subsequent MeBob opportunities that may present themselves between now and 3 o'clock Eastern time. So just a reminder that 3 o'clock Eastern is the cutoff. If we get a signal on that bar, I will enter. If I'm not in the market and I don't have a signal at the close of the 1500 or 3 p.m. bar, trading is done for the day. And that's it. Thank you very much for your time, and I'll see you after the close with the review video.